Good morning, everybody. Happy Monday. It's October 23rd, 2023. Great to be with all of you today. My name is Bob Lang, and it's time for our daily bites. Every Monday and Thursday morning, around 8:30, 8:45, we're coming at you with the daily bites. Basically, give you a spin on what's happening in the markets, what might be happened overnight, what's happened last week, what maybe going to be happening down the road into the future. So let's take a look at things. So we see futures are off a little bit this morning. They were down a lot more earlier today, maybe about 4 or 5 o'clock in the morning. I think the futures were down roughly about 30 to 32 handles, now we're only down about 13. We hit a low of 42.15 on the ES futures this morning. NASDAQ was down about 14,500. And it was at that point that volatility sellers took control and started selling volatility off and buying futures as the offset there. As we often see that mixture often sends markets in the opposite direction that we've seen the recent trend. So that could just be a short-term phenomenon here. Markets are not quite oversold yet here to an extreme degree. Let me show you the oscillators here. There we go. So you can see the oscillators here closed on Friday at NASDAQ minus 143, and the New York Stock Exchange nice at minus 132. So those are pretty sharp oversold readings. And if we get a little bit further oversold over here, there's going to be a whopper of a rally coming. I don't know what day it's going to be, but probably if we get a continued down day today and we close another day below the 200-day moving average, I'll show that chart in just a moment. There's going to be a good strong rally coming off of a good bounce coming off of an oversold reading. So I've already been prepared for something like that. I'm going to probably get even more prepared and maybe add some index calls expiring the following week, which is about the 3rd or the 4th of November. Don't forget there is a seasonally strong bullish historical pattern that is coming up here, and that's probably going to start on October 27th. It lasts for about 5 trading days, for about a week. If you look back historically, over the last 30 years, the markets have been up like 26 times, 26 times over the past 30 years. So 26 to 4 to 25 to 5. That is a great track record to follow during this time period. So, it only really holds when the S&P 500, and this stat, according to Larry McMillan, is if the S&P 500 is down at one point in October about 3.2%. So we're more than 3% down, 3.2% down in the month of October. Not for the whole entire month, but a segment of the month. We're down 3.2%. So that's an important thing to consider, especially if we do reach a deep oversold reading within the next couple of days. We have that set up there. I know there's a lot of other macro issues that are going on with the markets here. I'm just simply talking about historical seasonal trends, and oversold readings can cook up a nice rally, and especially when volatility is up here as it is right now. It's 22% on the VIX. It's down a little bit from earlier this morning. It was about almost 23%. VIX futures are up as well. When you get that combination there, it creates it's like a stick of dynamite. And you're probably going to have a day in the next 5 or 6 days where the market gaps up huge. Now, I don't know what the catalyst is going to be for that. Again, it could be just the oversold reading. It could just be the seasonality, or it could be earnings, right? We have a huge amount of earnings coming out this week. I think 30% of the S&P 500 will be reporting this week. We have big names like Amazon, Meta, Microsoft, and Alphabet coming out tomorrow, and a whole bunch of other names as well too. MasterCard, Visa, UPS, Coca-Cola. So you get it. There's going to be a lot of volatility in this market over the next several days. But as it is right now, the last 3 days, these are 3 of the worst days that we've had for quite a while. And I know there's a lot of people who were worried that markets were going to maybe crash today or something like that. I mean, it's absurd to try and predict that sort of thing happening, right? But with markets having come down so much, about almost 4% in the last 3.5 days, from Wednesday, Thursday, Friday. The market is fairly oversold here. We've gone through this 200-day moving average and closed below it for the first time since March, right? But let's go back to March for just a second here and take a look at this. And you can see from back in March, when we crossed below that 200-day moving average, we had 3 ugly days as well. And then we got a low that matched the January low at about 3,800 roughly. That was where the break-even point was for 2023, and we bounced sharply back and flirted around that 200-day moving average for about 6 or 7 days, and then launched at the end of March. When people were kind of unexpected, and through the 50-day moving average, et cetera, et cetera. So again, we had this similar 3-day pattern back in March that took us well below the 200-day moving average. We're not well below it now, just slightly below it. So we'll see if this continues, right? And we're not oversold yet on the RSI here, and you can see the MACD is just starting to roll over here. So is the market due for a rally? Sure it is, but trying to call it or trying to figure out exactly when that's going to happen is a very, very difficult exercise to do. So what I suggest, have some exposure on both sides, have some puts on, have some calls on, keep a lot of cash in there, because we really don't know what direction the market is going to be headed to, even though we're oversold over here. We're through the Bollinger Bands on the lower end as well too, from earlier in the week. And we have elevated volatility, elevated volume to the downside. So it just means that the market's in distribution right now. We're correcting, and eventually that is going to finish up. But where's it going to finish up at? Because if we break further below where we closed on Friday, and keep going there, we have some support down over here, but that comes in at about 4,100. This 4,200 level, it appeared from earlier this morning that we were going to come in and test that 4,200 level today on the S&P 500. So far with the opening right now, it doesn't appear that's going to happen. That's fine. Probably, having a close underneath 4,230 on Friday was enough damage for the moment. But we'll see how we trade around this zone between 4,200 and 4,230 today. Let's see what else here. I'm going to go back again. I'm going to keep talking about this. Been talking about this for a while, and this is what we've been seeing for a while, which is the NASDAQ high-low list. All right, and I've been putting this up since August, right? And we saw that August numbers were ugly. September came in even uglier, and October is coming in even uglier than September. So 3 months in a row of very, very poor overall breadth with new highs versus new lows. So the new lows are just killing the new highs right now, and we haven't had anything good. So when the price action is as it is what we're seeing, is as bad as it is, and we're seeing new lows expanding over new highs, that should be a red flag warning for all of you bullish investors right now, right? This is one of the key, most interesting projected indicators I've ever seen. And again, I harken back. I've said this a few times. Go back to 2018, when this indicator was showing lots of red and lots of black back in October of 2018. Yet the markets were going up day after day, making new all-time highs. That is a huge negative divergence. Now, obviously, we're not going up right now, but certainly back in August and September, we did see some strong movements up in the markets, right? This indicator is telling us that there's trouble down the road here, a couple months down the road. It could be December again, could be January, December, or something like that, or like early in 2024. So this is portraying something ominous happening down the road. Is it a market crash? I don't know. Is it just another 10% down? I don't know. But be mindful that we're right near the end of the year. We're only about what do we have, about 10 more weeks left to go till Christmas, till the end of the year. And there's going to be people saying, hey, listen, you know what? I've made some money in the markets this year. I'm taking my money off the table. I've lost money in bonds. I've made money, maybe made some money in gold if I had some of that. I've made some money in the Magnificent Seven, but those stocks aren't looking very good right now. Right, they're not playing well, and the rest of the market is substantially lower than those names. Right, the Russell 2000 down almost 6% on the year. It's going to be down even more this morning. Then Dow Industrials is negative for the year. The average stock on the S&P 500 is negative for the year if you look at the RSP. So all these things going against the markets right now. You have to be careful. You have to be cautious here. And the way to be careful is you do one of several things. Hold a lot of cash and just wait for things to settle down. Wait for a trend or of momentum to establish itself. Have some puts on. Have some insurance. I think that is probably the best, smartest way to do it, especially when volatility is only at 22% and we're seeing huge moves in the markets every single day. Why not protect yourself and buy some puts next week, 2 weeks, a month out, maybe even 2 months out? And you can buy put spreads if it's too expensive for you. So do something to help protect yourself against some of the volatility. We have a lot of uncertainties coming out in front of us. We really don't know how this Middle East crisis is going to finish up. The escalation went up over the weekend of more attacks in Israel. We also don't know how if the government's going to shut down in about 3 weeks or not. We don't have a Speaker of the House, and we have a lot of chaos in the House of Representatives right now. And that deal that was cut last month between Kevin McCarthy and Joe Biden, President Biden, is going to expire on the 17th, and that's the day that the deadline that was set that the government may shut down and not start paying its bills, and that could cause another downgrade in our bonds. So bond yields continue to go up as well too. We're seeing a lot of bond sellers out there, and that's not just the Federal Reserve. It's China. It's other countries out there that are selling our bonds because they don't think the paper is worth 5% anymore. Maybe it's going to be worth 6%, 7%. Who knows? But as yields go up, that becomes a competition for stocks, for equities, and it also becomes an increase in borrowing costs, not just for mortgage holders, but also for banks and for real estate, commercial real estate as well too. So a lot of issues out there that are unresolved. It makes sense that volatility would rise because we're not seeing a lot of resolute solutions over here. And then of course we do have later in the week, big day on Thursday. What is Thursday? We have the release of the first look of GDP for third quarter, and that comes in real strong. The Fed is going to be looking at possibly tightening rates a little bit more, maybe before the end of the year or even into 2024. Remember, Chair Powell last week said he didn't feel like monetary policy was tight enough. And it was that comment right there that really started an avalanche of selling into the end of from Wednesday on into the end of last week. So that's going to be it, everyone. Have a great day. Have a great day of trading. I'll be back with you on Thursday morning talking about earnings and talking about interest rates again. And hopefully we'll have a little bit more brighter things to take a look at. And remember something, have some protection on, but also have some stuff working on the other side of the market, on the bullish side of the market. I think it's very, very smart and prudent to protect yourself, but also the trend of the market long-term continues to be up. So that's going to be it, everyone. If you're in the chat room, I'll see you a little bit later on today. And otherwise, have a great trading day and good day, good couple of days, and I'll see you guys all back on Thursday. Thanks, everyone.
Everywhere I go, people need some reason to believe. I don't know about anyone but me. If it takes all night.